Hello folks, hi, it's Mr. Intermarket Analysis again, bringing a review of the FTSE 100. Okay, so basically what's happening, so last time, as you know, I was bearish on the FTSE and the market reversed in the opposite direction, so slightly miscalculated that, obviously got it wrong, expecting the bear flag to play out. Ever since then the FTSE has held a resistance on the upper channel. Okay, so as we know, there's an upper body here. Upper body resistance is around the 6730, 6725 level. So obviously it's been holding that ever since. We are in the downward sloping wedge pattern. Okay, so it's holding that resistance level at the present. If we do break that, obviously we short squeeze higher. Then obviously the levels that we could go to are obviously. Let's have a look here, 6770, 6780, and then obviously the 6820 level. Now, the slight thing here around with regards to FTSE at present, as we all know, is that it's lagging all global indices. We've had the DAX make a new high, even the Euro stocks has been quite buoyant. The CAC is obviously weak, as we already know from our previous charts. So there are a lot of divergences out there. Even the Nasdaq obviously made a new high and obviously has reversed quite sharply post Mr. Icon's talking his book. Okay, so it's tricky at present. Okay, it's certainly tricky at present. It's a very tricky environment. You've got the Aussie USD in the opposite direction. You've got commodities that are relatively weak. That's why the FTSE is weak. You have talk about higher interest rates in the UK, which obviously is keeping sterling afloat and are keeping the FTSE at bay. Okay, so keep an eye on that, folks. There's a lot of fundamental factors at play. Obviously, we've got Miss Yellen in the background, and we've got tapering as well. So fundamentally, right now, it's a bit of a jungle. Okay, I'm not going to spend much time on fundamentals today. I want to keep this video short, just focus mainly on technicals, and then we'll see what happens there. So basically, Asia overnight was relatively flat. The European session initially had some weakness. FTSE tried to pull back. Initially, I wanted to go long on the FTSE, given that Asian markets were flat overnight to stroke buoyant. They did raise the losses, and obviously awaited, and the market failed to do so. So obviously the fact that the red candle was being held even with Asian or China markets buoyant. We had copper under pressure, oil under pressure still, and obviously we have got gold under pressure as well. Which even with the Bitcoin hitting almost $1,000 and then reversing sharply, falling almost 50%. The fundamental picture right now, the backdrop is very confusing, given the fact there are a lot of fundamental currents that are fighting one another, and I'll try and hopefully make another video and explain just the fundamentals alone. So with regards to technicals, again, inside bar, we're in a bearish expanding wedge pattern. Now bear in mind, a bearish expanding wedge pattern, what is that based on technicals? It's a bullish pattern if it's at the top of a market. Basically what it means, it's consolidating and creating a potential bear flag for the next move higher. That's if commodities can start to move higher. Okay, and at the moment commodities are failing to move higher, even with the Chinese plenum, etc, etc. Initially Chinese plenum was interpreted as being bearish, and now it's been spun as being bullish. But if it is, why isn't copper going higher? So there's a lot of contradictions there, to be honest, by a lot of these so-called analysts. Okay, even so-called journalists. Well, they're paid to write a story, so you can't really blame them. But with regards to the analysts, I mean, they don't trade their accounts, they just try and give analysis on the market. So again, take it with a pinch of salt. Do your own analysis, folks. Don't rely on the, I mean, you can obviously not, I'm not saying don't rely on, I mean, obviously don't rely on them. You certainly, God's given you a brain, utilize your own. It's no, sometimes there are certain individuals that have a superior intellectual understanding and awareness of the economy than you, then that's fine, submit to them. The very few are people like Kathy Leon, very, very good. You can follow Kathy Leon on Twitter. Ashraf Laidi, very, very knowledgeable, a lot of wisdom. Obviously these people trade their accounts and analyze the markets as well. There's another chap called Neil Gilbert. He's pretty good. Okay, so I'll try and follow him. The rest, I can't really comment on the rest out there, to be honest with you. I can't really comment on them. Okay, so with regards to this, again, let's go back to this chart. Okay, we know there's support level here at 6624 on the downside, previous resistance equals support. We've got horizontal resistance levels here. You've got the bearish inside bar consolidation right now. We can either go lower, but bear in mind the way in which I've been taught technical analysis by InTheMoneyStocks.com, people like Gareth and Nicholas Holloway. Shout out to them as well. You know, respectable individuals at the InTheMoneyStocks.com. Certainly visit the website. Very knowledgeable, very in terms of technical analysis. I learned majority of my technical analysis from there. If a market consolidates in the lower 50% or lower 25% of a red candle, then the success of that bear flag playing out is almost 80 to 90%. Okay, or between 70 to 90%. The fact that the market has consolidated the full red candle, okay, there's a high probability of this negating and creating a short squeeze and moving higher. That's only if commodities can start to get their move higher. Okay, I expected that move higher today, given the fact that China obviously was bullish yesterday, and obviously overnight it was bearish at one point because the US market sold off post Mr. Icon. But yet China still managed to reinvigorate and move to the flat line. So that again is a bullish sign, the fact that they can shake off the American sell-off. But the FTSE failed to do so. Okay, so we did try and test that 6700 level, 6710 twice, but we failed and reversed in the opposite direction. Okay, so let's look over to the smaller time frames now, see if we can try and get further clues, do some more Sherlock homework. Okay, so the FTSE 100, so the pattern that we have here, bearish channel, we broke out wide due to China, okay, which is quite impressive. Okay, keep an eye on that, folks. Okay, so we had an inverted head and shoulders pattern, which we have to look at and respect. I mean, there's a larger one here right now. We are creating a potential right shoulder, so just keep an eye out for that. But first of all, the first one was a break of the channel, so I expected the market to break and obviously come back, retest the breakout, and then obviously move higher and negating this bearish engulfing candle. Okay, but if we fail to do so, therefore I switched my bias to the short side, given the fact that the market was consolidating within that red candle, and obviously down we go. Okay, so we had an inverted head and shoulders pattern. The market failed to hold that neckline. Okay, so that inverted head and shoulders pattern is now gone, and we can't respect it any further. Okay, the only thing that we can respect from a trading perspective right now is that we have two patterns. Okay, so I mean, obviously as traders, it's ultimately your decision which one you want to go with, and try and work out obviously where the market's going to go. But from my perspective, you have this potential H&S formation right now, which we're seeing here. Okay, this is your left shoulder, this is your head, you got your right shoulder, and obviously down we go. Okay, so keep an eye on that pattern there, but also remember that H&S formation at the bottom of the market doesn't have a higher success rate. Okay, now I'll explain why this pattern may well play out going into tomorrow, given the fact that obviously US markets are down, etc, etc, provided China goes down. Remember, if China is down, then this will definitely move lower. Okay, if China obviously revives itself and holds a flat line, then expect this to move higher. Okay, so that's basically your barometer. On this occasion here, you've got a left shoulder here, you've got the head. Okay, you've got the neckline again. You're testing. We're creating a right shoulder. Provided, now bear this in mind, provided we hold the 75% retrace. Okay, the 75% retrace, Mr. Belowski's work. If you ever get some time, go check him out, folks. Mr. Belowski, Belowski.net. He has a lot of work on it, technical analysis, especially with regards to 75% Fibonacci level can be quite important, based on my own analysis as well. A lot of obviously trial and error, etc. A lot of my own observations. This is his website, patternsite.com. check it out, very good. Certainly worth a visit, certainly worth a read, and just keep abreast of what's happening in regards to technical analysis. Okay, so definitely worth visiting. Okay, so then, so let's go back to our understanding of technicals. Okay, so provided, like I said again, inverted head and shoulders pattern, provided we hold the 75% Fibonacci. So let me get rid of this H&S here so you can get a clearer view. So can you see this? Okay, so basically where do we go? Okay, so given the fact that we're consolidating now, okay, we create a right shoulder, then we move higher. If you take the pivot low, 6611, take it to the neckline, which is 6740, project that on the upside. It's quite late. Mathematics was my strong subject. Maybe it's not going to be right now. 6610, 6740. You're looking at what, 68? Come on, 6870, around that region. Okay, so let's just call it 6830, given the fact that we've got the double top here. So we go back and revisit high at 6830 and higher. Okay, so that's your Christmas rally right there. Okay, if you want Santa Claus to come and help you out, and if you want the Santa Claus put, okay, screw the Bernanke put, screw the Yellen put. Okay, let's go for the Santa Claus put. Okay, Santa Claus is coming to town, hip hip hooray hooray. Okay, so provided Santa Claus keeps this market higher above the 75% Fibonacci, which is 6640, provided the FTSE holds a 6640 level, then Bob's your uncle. Okay, off we go to the races, and up we go, based on the Santa Claus rally, QE, China, etc, etc. Okay, we've broken the bearish channel, Again, that again should act as support. Ideally, from a healthy perspective, I mean, I've gone long on the FTSE overnight from 6676. By the way, I did short the market. Obviously, like I said initially, I started to go long. The long failed. I got out of 669495, whatever it was. I got out break even. I then shorted the market from 669495 region. Obviously, got a nice little average entry around the 6701, 6702. And slam dunk the market went. Okay, so although I did have a long on the Nasdaq, so I got stopped out on the Nasdaq. You also know I had a swing short on the euro, which was stopped out unfortunately from -90 earlier in the week. I also had a short euro today as well. So currently at the moment, tricky markets. I mean, last week I finished with 400 plus points. This week I'm -12 or -16 points in 2 days. So certainly isn't easy for me right now trying to decipher these markets. So and I'm somebody who nails 200 points a week in my sleep, so it's very hard right now. Okay, and hats off to those that are doing well this week. You know, respect, utmost respect to you if you're doing well this week. It is very tricky right now, given the fact that you got a lot of fundamental currents, which again, like I said, if I get some time, I'll explain all the fundamental currents in play at present. Okay, but let's just keep it technical for now, because I know everybody out there, the majority of individuals, it's very hard for them to even understand the fundamentals, because I'm somebody who has an economics degree, and yet I find it, you know, a great task to sum up all the fundamentals and read them and to filter through the noise. So how will an average individual do that? Okay, and even some of these analysts are confused, to be honest with you. Like I said, there's only a few reputable ones. The rest are all clowns. They don't have a clue what's happening. Okay, all they want to do is sell their books and obviously get more hits on their website. Okay, so on this occasion here, okay, like I said, inverted head and shoulders pattern. Keep an eye on that. 50, 61. 75%. Ideally, you want the market to hold a 50%. So that's hence the reason why I've gone long. 50% Fibonacci retracement here. You do have a H&S formation, which I'm fully aware of. The only concern that I have on the downside, which I'll show you in the smaller time frames. Okay. So first of all, obviously H&S formation here, which I played, which was fantastic. That was a good trade. Okay. On this occasion here, the market went lower. We double bottomed around this region here. Obviously we've had this trend line we've been holding, so far so good. Okay, that's one of the reasons why I've gone long as well. Okay, like I said, you clearly see here H&S formation, you can clearly see here, and the concern that I have on the downside, this is a strong argument for the market to go lower, is the fact that we have this unfilled gap down here at 6630. Okay, so we could close out on a spike and create the right shoulder on the 60 minutes and then obviously propel higher. Okay, so that's a possibility. Also the fact that we've had this key trend line here, we've held, we negated, and ever since we've negated, we've acted as previous support equals resistance. Yeah, each time we've hit that, the market's been very obedient. So it's a battle of the two gaps. Okay, so if China goes higher overnight and we keep going the QE, QE frenzy and QE train, we close the gap above, which is around the 6725 level, or we become pessimists after post Icon, who's talking his book and wants his market lower so he can buy the dip. The absolute moron. Okay. No one individual should be able to move the markets, really. I mean, in the day, we shouldn't be relying on these dimwits, because all they're doing is talking their book. At the end of the day, we should be intelligent enough to formulate our own, obviously, opinions on the market, etc. And his opinions no heavier or weightier than yours. These individuals, all they do is front run the markets and talk the markets any direction they want, because they know that the markets are stupid enough to do so. Okay, so don't lend your ears and your brains to them. Formulate your own opinion, folks. Okay, so again, keep an eye on this gap level here, 6630. Obviously we've got the upper level at 6725, so it's a battle of the gaps. H&S formation again is against that, but we have the IHS formation, which I've explained as well. Okay, also on the daily chart, like I discussed before, if China momentum can continue, if the QE momentum continues, given the fact that every other global indices has made a new high and the FTSE is lagging, the FTSE has a lot of catching up to do. Okay, the FTSE has a lot of catching up to do, up to 6845. The last pivot high was around the 6870 level, which again, the 60-minute IHS formation gives you that level. Okay, and we can obviously pull higher as well. Okay, so if you go to our 60-minute chart, all you need to focus on is that IHS formation. We've broken the bearish channel. Technically the pattern's there, provided we hold this level 50, 61, 75. We don't go below 75, although there is a possibility, like I explained in the 10-minute chart, there's a gap at 6630. Then hunky-dory, Santa Claus is in town. Okay, I think I'll wrap it up there, folks. Remember, risk on, risk off, wax on, wax off. Goodbye now.